try this strategy in case you have been struggling with your trading. So I'm going to share with you a systematic way of doing this. So we are going to do this together. Let's dive right in. Let's start from a new week, assuming that this is a total like a new week, and of course let's do this. So first thing first is you want to go to the daily time frame. On the daily time frame, you want to check the key levels and where price is potentially reacting from. So the first thing that came to our mind, or the first area that we need to mark out, will be at this level. Okay, let's take this out so that we can start from a new week. Okay, so the first thing, if you come to the daily time frame, the first thing that comes to our mind is this break, right? This SBR. So this has become SBR, right? That support break resistance. And of course, we also have this key level. However, what did you notice? Did you notice that this key level was broken? So this key level was broken, which also indicate that price might likely want to continue to the downside. So in this scenario, what do? We need to check the lower time frame, because on the higher time frame, we have been given a hint of what price might likely do. See this candle? That's a momentum candle. Now we'll go to the 4-hour time frame. On the 4-hour time frame, what can you see? On the 4-hour time frame, we can see that price is currently reacting from this PD array. This PD array is the fair value gap array. And in this fair value gap, what can we see? What can we find? You notice that there is a classic level here. So this classic level, that's exactly where price is reacting from. Seeing that price is reacting from this key level, what exactly is it showing us? It's giving us an indication that, okay, price might likely want to continue to the downside. What else can we see in this whole range? We can also see a candle range, which is the CRT right there. So this becomes the C arrow high, the candle range high, right? So automatically this becomes a candle range low, and in this scenario, this same candle that swept the high already swept the low. So probably we might want to check this as the nearest draw on liquidity. So you just put that at the back of your mind, and why we move on. Now this is very, very interesting. So we play price and see, or rather wait for price action, and as you can see, price attack this level. However, the fact that price tagged that level does not mean that price wants to reverse. We need to know, okay, what exactly is price doing? Okay, so of course this is the day we want to trade, because this whole zone was Monday, which we already checked on the higher time from the daily, right? So I was just explaining what Monday did and where price might likely go to. And this is Tuesday, the same thing is happening, and we have a C arrow high right there. So that's a C arrow high. Oh, this is C arrow high right there. So after the C arrow high, as you can see, the same thing that happened. So our next draw on liquidity potentially could have been around this zone, right? And of course, price blew through it, which means that the momentum to the downside is still very strong. So in this scenario, what do? We need to be patient. Yes, we need to be patient. So wait for price to do its thing. Now we have a PDR formed, we have price forming a fair value gap here. So this is a fair value gap right there. Now, why do we look at fair value gap areas? Fair value gaps area are very, very powerful. One of the reasons is because there are gaps. There is no fair value in price, and you know, for price to move to a specific direction, there has to be a form of imbalance, and when there's imbalance, price will have to come and rebalance it. All right, so what we have here is more like an imbalance. So price will likely come and balance it and continue to the downside. Why? Because this is what we call that's why we call it fair value gap. So if price comes and trades into it, it becomes a fair value, so there will no longer be gap there. Do you understand? Exactly. And usually this fair value gap is what we call the internal range liquidity. In this scenario, this is internal range liquidity, and usually when an internal range liquidity is tapped, then we need to check for the external range liquidity here and potentially here. Now you need to have all of these scenarios in your mind when you are in the front of the chart. Okay, so what else are we going to look out for? Now we also have this zone as our CRT. These are CRT, and of course this becomes a candle range low. Are we going to buy from here blindly because it's a candle range? No, we are not going to buy blindly. If we go to the 30-minute time frame, we are going to 30 minutes here because that was a 4-hour CRT, so you can either use 30 minutes or the 1-hour time frame. Now, having seen all of those, the next important thing that we want to pay attention to is this particular level. Now, if we go to the daily time frame, let's go to the daily time frame so you can see. On the daily time frame, what did you notice? Notice that we have a key level here, which means price could reverse from this zone. But is it certain that price will reverse from this zone? No, it is not certain. Okay, why? One of the reasons why it's not certain is when we don't see a corroboration on the lower time frame. And of course, remember that we also have this as our ICRT on the daily. So we go back to the 4-hour time frame and we have our what's it called now? We have our CRT, which means that this high is a potential target. Do you understand? Is a potential target for that particular for this particular CRT. However, don't also downplay the area of internal range liquidities. Now, for us to confirm these buys, we'll need to see a change in structure on this 4-hour time frame for the daily. Whereas for the 4-hour structure, which is the CRT, we need to go to the 1 hour or the 30 minutes for the price action. So what can we see here? We have a CRT here, right? This was the first tap, right? This was the first tap. And of course, this candle, when this candle breaks, it means that this time frame I want to continue to the upside. Why? Because this was the last candle range before price taps into the key level. And of course, what do we have here? We have this as a liquidity. So this is a liquidity have been swept right there. Now, when this happens, the next important thing you want to ask yourself is, what is price likely to do? So I've created different scenarios for us, and based on what we are seeing on price. This is daily. Even though we have a 30-minute break, we cannot use 30-minute break to frame our daily setup. But we can use 30-minute break to frame our 4-hour setup. So for this scenario, we already have a 4-hour CRT. So in that scenario, in that case, we could potentially use this QM. This is a QM level. We can use this QM to frame a setup. Let's take this to the right. To frame a setup, a buy in this case. And if I'm buying based on QM, of course, my stop loss will be a little bit, my stop loss will be around this zone right there. But don't forget that on the daily time frame, this is a higher time frame, a 4 hours internal range liquidity. So what does this imply? It means that this is an external range liquidity, and we're expecting price to move into the internal range liquidity. And how do we do that? We do that by anticipating price movement. So what else can I do? Now there's what I call, this is my fib, and I call this an algorithmic fib. So this So I'm expecting some reaction around the zones, around this area. So once I see those reactions, then I'm going to take actions. Okay, so at this level, I'm also going to look for a potential buy from this particular area. Why? Because after the sweep, I have an engulfing candle here. So after seeing this engulfing, and of course this candle overlaps this QM pattern. So anytime you see the second candle, which is the second phase of price, right? For those of you who have been following me on YouTube, I talked about the different phases using candlesticks to calculate the different phases. So this is a phase 3. So whenever I see phase 2 or phase 3 candle, overlapping a QM, we could potentially use that particular area as our entry. So in this case, I am willing to enter off of this particular level, and let's see what price we likely do. Okay, so we have a push to the upside, and of course that's a very nice reaction. However, I'm not going to enter directly. We'll wait patiently for some confirmation so that we'll be very sure that okay, price might be willing to come to the downside. All right, so as you can see, that's why we need to be patient a little bit. This is very, very important. Okay, so wait for price action to do its thing. And of course, we have what is CRT here, which is we have both a CRT and a classic level. You understand? So this is a key level. A key level have been formed on the 30-minute time frame. Now that this key level have been formed on the 30-minute time frame, what we need to do is we could potentially enter directly, or we still wait for price action to do its thing. Now I can choose to enter directly and still be correct. However, this might be a little bit aggressive, and if it's aggressive, then I will have to give it a little bit buffer because of spikes. Now, why did I say it's aggressive? Even though it's in our PDR areas and is in our algorithmic fib levels. The reason is because look at this candle. This candle never closed below this candle, so the momentum on this candle is not as strong as this one. So there could be a fake out easily like this, right? It could happen. But if I want to be aggressive, that's where I will put my entry level. Okay, so let's push this out of the way. Then of course, where will be my target? I will have to check the 4-hour time frame. Why? Because that's a 4 hours, that's a 4-hour PDRA, right? So if I'm doing that, of course, this is a 4-hour level, right? That's a 4-hour level. And of course, we also have, okay, as at then, this one wouldn't have been formed. So that's where we're looking at, unless I want to check the 1 hour. So if I'm checking the 1 hour, of course, then this low becomes my what? CR low, which is my short-term target. Now, I call it short-term target because we want to also confirm if this buys is going to hold from this level. Do you understand? We want to confirm if it's going to hold. If you also notice, on the 4-hour time frame, we have a CRT here. The third candle, which is the phase 3 candle, did not close above the zone, so there was no engulfing, which means price might still likely come down and come towards this low. Is a possibility, or come and mitigate any of these areas. Do you understand? So that's why we are looking at all of this. Of course, this becomes a draw on liquidity as well as a result of where price is reacting from. Remember, price moves from external to internal, internal to external. So fair value gap is created, and when fair value gap is created and tapped, price tends to go to the external range. And that's why I say when price is moving buy and sell, of course, last week I showed us something interesting, how that immediately price got to my TP. I didn't set a buy limit there, but you could see in my screenshot that there was a buy there, whereas the sales I took was somewhere up here. what you saw right there is what I always explain in my videos, that anywhere that you find buyers, sellers are usually there. So inside this bearish candle, there are buyers. So if we go to a much lower time frame, you notice that there were also buyers involved. Look at that. This weak reaction, these were buyers that were being involved in that stuff. So what are we going to do right now? We're still on our 30 minutes, remember. So what do? Wait patiently for price to do its thing. And of course, we're willing to enter from there, and of course that was a nice reaction. So wait patiently. Let's take this off so that we see things clearly. Now price is even giving us more indication that okay, it might likely come down. However, the momentum is not yet strong, so we can just wait. Now after this candle closes, I am willing to enter based on this QM level. Why? The reason is simply because remember that we're waiting for price to give us a momentum to the downside, and this candle did it, and this is the next available key level that price might likely want to use. So I'll place my entry right there and my stop loss above that zone, and just like this. Okay, so if I enter here like this is we also have to check the higher time frames. Very important, because you don't want to just enter blindly. You also want to see what price is doing. But remember, we have an overall draw on liquidity right there. So in this particular scenario, what else can we do? It's quite simple, right? So I'm going to pick my algorithmic tool, which is from here. So we'll mark from this level, and of course price gave us an engulfing right there, overlapping, what did I say earlier, overlapping the QM. So that's why my entry was there. Do you understand? So now that my entry is there, let's remove this from now. Why? Because the momentum that price is using to come, we want to see what price wants to do. Okay, so of course that level can still be very much valid. Of course it is very much valid. Okay, so we have this level. If we come to the 1 hour time frame, we could pick a key level from that zone, and that's also around our QM. So if I want to enter there based on what? Based on the 4-hour CRT, what do? I'll put in my buys right there. I'll put in my buys, and of course I'll put in my entry around the zone. Now there's something else you need to pay attention to. Remember that our overall bias is bearish. Why? Because we frame that from both the daily and on the 4-hour time frame. So this buys here is just a retracement set up based on the algorithmic fib level. Okay, so of course look at the level. That was the level right there. That's the level. And of course if I pick this the other one, which is my fifth storyline, I call it this fifth storyline. Okay, that's the high. So when you have your swing point, the high and the low, so what can you see? So this area, right? So usually you now pick the key level that is around that zone. So what am I going to do? Like I said, this QM is still very much valid for me because of how price broke and overlapped it. So that's what I will do. I'll wait, and Now, of course, I could place my stops here. Rather, I could place my stops here, but because of this level, maybe we could just give it a little bit of buffer right there, or we can as well wait. We can enter directly or wait for further confirmation. Now, take note, when this happened, price gave us different occasions of, or give us different point of interest. We have the Komepips ICRT here. This is an ICRT level. This one, look at that. That was a CRT, and the CRT failed. So because it failed, this candle becomes our ICRT. Now, because I'm selling and the ICRT I'm seeing here is bullish, is a bullish candle, I'm going to use the 50% of that ICRT. So if I use the 50% of that ICRT, that will be this level right here. Now, can I enter directly from this level? Emphatically yes. And why? It's because this is our actual trend, and this is the confirmation that we already received. We already got our confirmation right here. So either ways, anyone that price taps first is where we are going to look for our entry. Do you understand? And where would this target be? This target will have to be this low. And if I want a more precise stop loss level, then I can pick, I think this is a little bit choppy right now. Can we take that out? I can pick this. Let me show you my flipper SD. Yep. No, the other way around. Let's flip it like this. Yep, just like that. So this zone, 50%, these zones are my potential reversal points. Yes, these are my potential reversal points. So as well, I can as well choose to put my stops around the zone. Okay, but let's put it on this particular level. Okay, so now that we have all of this going on, remember we have an entry here. So I was just doing all of those explanation for us so that you can grasp them. You might want to rewatch this video up to like 3 times or even more if you wouldn't mind. Okay, so we have this, and of course, remember our inducement. That was also an inducement from that level. That was also an inducement. So we see what price likely do. So that's a nice tap from the QM right there. And of course, this was that 1 hour key level that I drew out. And of course, we're having some reactions. Okay, so now that we've seen this, what else can we check? Remember, there is an overlap point of phase 3 candle with a QM. So let's check the line chart. Can you see that? So this is a QM right there. So if I'm not able to enter directly, or I was not so sure, just like in this scenario, because of the 1 hour key level overlapping this QM, but I was very certain somehow that this QM should work out, right, because of how price overlapped it. So if peradventure I want to enter directly, my stops will have to be a little bit high. Like my stops will have to be a little bit high. Do you understand? Just like this. So what can I do? Can I enter directly here? Emphatically yes, I can enter directly from here like this, and my stop loss will be just like this. Why? This is the reason. We already have all the liquidity that we're expecting to be swept. If we come to the 5-minute time frame right now, on the 5-minute time frame, what do you notice? You notice that there is a sweep already, and there's now even a break. There's even a break of structure already. Do you understand? So because of all of those, it could give us a potential zones where we might want to look for our entries. Now this is getting even more interesting. So look at this zone, look at this zone. Now these extensions, these are standard deviation by ICT. These are extensions, potential zones that price might want to reverse. Now this is our key level. We have a key point right there on the higher time frame. So let's play price and see what's up. Yeah, so there was no tap, and of course this zone is a QM, and of course I'm still willing to enter from this QM. Otherwise we could potentially miss the entry as well. But let's see how it goes. Okay, so we're having some push to the downside. Can we get a tap? Oh, obviously there's no tap. So that was a miss entry right there. So wait patiently. All right, yeah, that was obviously a miss entry. We had a miss entry here. Now how could we have gotten involved? Well, where I place my entry, I think I'm okay with that zone. I haven't seen that 30 minutes what's it called now level. If I go to, because the time frame alignment for that will be 5-minute time frame, but this 5-minute time frame looks a little bit choppy, and it even have a lot of, it had a lot of ICRT. So for me, I think that's actually a miss, is literally a miss setup, because even the 50% of this ICRT 5-minute ICRT price still did not get there. So let's take that as a missed entry. All right, so remember we are still looking at this particular level right there. So basically we're expecting that price taps this zone. So let's push that a little bit forward, right? And when anticipating that price taps that zone and push up. Now we could use this. Oh, let's flip that up like this. Yep. Now we can choose to enter directly here, or better still, we can still wait for what? We can wait for that confirmation, because even inducement is created around that particular zone. Do you understand? So let's see. Okay, all right, it seems all right. Okay, that was a tap, almost. So this, remember we have this, that's a key level. I can choose to enter. Let's say I was waiting, I can also choose to enter from this level right there, but it's not guaranteed if price will tap that zone or not. Okay, then we also have this various QM level. So of course this was a liquidity, this was a sweep. So if that was a sweep, then I could also use this. Yeah, so wait for an engulfing. Okay, so I have my engulfing there, and of course that was a very nice tap on this QM. Can you see that? That was a QM. Of course, I didn't see that earlier, so I did not mark that on. So wait patiently, and what do we do now that we have our engulfing? I can choose to go to the lower time frame, like 5 minutes, and look for potential zone for my setup from potential entries. And in this scenario, which area could that be? Which area could that be? Okay, we have one here. Let's go to 30 minutes. Yeah. So let's wait. Let's, of course, at least we're already in this trade. Even if we don't see a re-entry setup, we're cool. Yeah. And that's it. And price keep moving. Okay, so real quick, if price comes back, yeah, this is a QM. Yeah, this I can as well enter from the zone for a continuation setup. Why? Because this our fib level, where we have a break. So this is a break. So we might potentially see a retracement, probably retracement or total reversal. In all of this, you need to come to the 4-hour time frame. Yes, you come to the 4-hour time frame and see what price is doing. And this is it. What did you notice here? I'm going to put a vertical line here because obviously we're going to see either in 1 hour 30 minutes entry from this. We have a CRT here. If we have a CRT here and that same candle took out the actual CRT low, which means our next draw is here. Okay, so what do? We'll go to either 1 hour or 30 minutes because that's from 4 hours. That's the time frame alignment. So 1 hour is the X2 time frame, the 30 minutes is the X3 time frame for 4 hours. So what else can you see? Okay, yes, this is a very nice QM level. If we go to the line chart, you can see it right there. That's a very nice QM level. Now, QM levels are very, very powerful when paired correctly. They are very, very powerful. Okay, so having said this, and of course, remember that this is around our what's it called now level. If we go to the 5 minutes, we have a 30 minutes CRT, and we'll go to 5 minutes. Let's say we want to see where price might likely want to trade from. That will be around, so this the 30 minutes CRT. Yes, so this was the last, so we could use this. Yes, so you see price is around that area. So if we use this flipper SD, that will be around almost the same area. Yeah, but this one is a little bit high. But the most important thing here is this QM and the overlapping. Understand? Remember, this was the last candle of that 4-hour CRT. So we have a 4-hour CRT. So basically, we potentially need to see price continue because price is very close to our draw on liquidity. So because price is close to our draw on liquidity, we need to check for, remember these zones that we drew earlier. So we might also see some reactions from here. These are standard deviations. Okay, so we have this QM and this, and what else can we find? We see we have what? An internal range liquidity. So price comes, takes out this external range, what else are we expecting? Price might likely want to go for what? The internal range liquidity. So in this scenario, that will be it. And we also have a QM, and of course even multiple. See this QM, the QM that was not tapped earlier, so this is no longer a QM. Okay, this has become an SBR. So we have two levels there, so we could potentially enter from there, and our stop loss above this, because we're using this is the candle we're using to frame the stop loss. And of course, where your targets can be, because this is the nearest target we could think of. And like I said earlier, we have standard deviations here. We can as well extend our entry or our targets into any of these standard deviations. So let's use this particular one. Okay, so I think this one is no longer valid because price never came for it. So that's very nice. You can see that touched it, and of course wait, and all right, that's a very nice push. Okay, let's see how price will react to this key level, to this point of interest. Remember, this is a standard deviation, and price is currently reacting from that 50%. You see it. Basically, this is quite interesting once you understand this. Now, watching this, maybe this is the first time you are watching my YouTube videos, you might be confused, a little bit confused, but don't be confused. It's something you can learn, and I strongly believe that it's something you will also understand. I strongly believe that you are going to understand this as well. So it's very important that we pay attention. Okay, now before I move on, in case you want to join my mentorship, feel free and reach out to me via Telegram, and of course I'm more than interested to teach you the strategy, the trading protocol, right? Because believe me, once you understand this, most times you are going to be profitable. Yes, you might say, oh, how am I able to pick this is the logic. Once you know the logic, right, sometimes it's easier for you to navigate. Just know the logic and time frame alignment and the rest, and you'll be okay. Okay, so let's see if we're going to get another entry. Now take note, before we do that, we'll need to go to 4-hour time frame. This is very, very important because the 4-hour time frame is very vital, right? So we're having a reaction from this zone, so we'll need a corresponding time frame to give us an CRT or an ICRT. So either 4 hours, either 1 hour rather, which is the X2 or X3 time frame. So wait, so of course we had a CRT there, but there was no engulfing. So we also have another CRT here, but is that an engulfing yet? No. Is that an engulfing already? Yes, there's an engulfing. So this engulfing is overlapping what? This QM. So what do? This this QM become an area I might be interested in taking a buy. That's if price decides to come back here. And where will now be my target? Where will be my target? It's quite interesting to know, right? Because if we have this as CRT, and of course this is the target for this time frame CRT, but we need to go, because when price was coming down, this becomes this turns low resistance liquidities. Okay, so my target this high, potentially this high. But wait, for us to determine that, we need to go to the higher time frames, because those are the time frames we need to use to frame. Yes, look at that. We had the 1 hour CRT. Now we have the 1 hour CRT there. Let me put that on. Would I have gotten an entry? Probably not, because I wouldn't want to force it. There wouldn't have been an entry other than where I put my level. Okay, so what else can I do? What else can I do? Yes, I can choose to use this. Yes, I can choose to use this. So this might tell me that, okay, price might want to continue to the upside. This is an overlapping QM. Can we remove this? Can we clear some of this already, or just reduce? And like that. Now let's remove this. So, okay, so we wait. I'm not going to enter directly. I wouldn't want to. I may likely want to see a kind of reaction from this QM. And I could as well enter directly actually, but I wouldn't want to. Okay, this SB. Okay, QM is there as well. There's a QM there. But wait, remember this is a potential level as well. So price touches a key level around here and gives us what? A CRT. Am I going to enter? No. I'll wait. Why? Because the trend, it seems as if the trend is about to change. And usually you find out on the 4-hour time frame. Let's see. Okay. So this is a nice reaction. So we might want to see a breakout to know if that buy is going to start. But for now, we don't know. So we'll wait patiently and see what price might likely want to do. And of course, look at this. We have an engulfing. Yeah. Is it overlapping? Yeah. So if I want to enter directly, this will be where I will potentially enter. And of course, this is the nearest induced what's it called now? That's the nearest drawn liquidity, or this key level, or potentially this low. Right. What else can I do? I can as well use this. So let me use this in this scenario. And of course, I can as well go to the 5-minute time frame. 5-minute time frame. Yeah, I think I'm kind of cool with that particular level. Now, you see how the stop loss placement reduced drastically from here to this zone. So it's not that I'm just putting it in a random place. So even if my entry is here, that was where I placed my stop loss. So if my entry is now here, you see, it will now reduce it. So it's a possibility. Okay, so let's see. Oops, and boom, price pushed to the downside without tagging us in. All right, so it happens sometimes, especially when you want to wait for extra confirmation. Oops, okay, see this one now. Wow, that was so close. Okay, we had a level here. Yes, a QM here. As you can see, in this case, price tapped and started moving. And what else can I do? This is it. This is what I could do. We have this. And of course, we have a 5 minutes. We have to check 5 minutes. Okay, this is where that candle ended. 5. Yeah, this candle. Yeah, this is a CRT. But seeing that this is an ICRT rather, 50% of that ICRT could be used. But I think I've passed my message already. Every other thing here is just, of course, see that was a very nice tap to the upside, and boom. All right. And of course, remember that we, of course, by then would have deleted this one because price moved without us. So, yep. So this is pretty much it. Imagine taking 1, 2, 3, 4, 5, 6, 7 within 2 days, 7 setups. Of course, there's no way you could catch everything unless you are just sitting on the chart all day, right? But out of all of this, you, let's say you catch 3, right? And look at an average risk to reward ratio. This one was 5, 1 to 6. This one was 1 to 4. Of course, this was a retracement setup. And of course, you know, this one was 1 to 8, and this one was 1 to 8. You can get more. You could potentially get more. Yeah, this is our okay. Yeah. Yeah. So basically, of course, registration is ongoing to join the mentorship, the trading protocol. You might want to, if you want to, just kindly send a message to me on Telegram, and you get an instant access. All right, see you on the inside.